Welcome to Second Take, the show that focuses on the issues behind the news. My name is lead editor Martin Klima. Joins me today to unpack the latest in the mining industry. Welcome, Martin.
Thanks, Ashni.
So can you talk to us about the need for incentives for the listing of companies on the smaller end of the stock exchange in the face of lack of listings on the JSE?
Yes, the whole smaller section of the Johannesburg Stock Exchange is under threat because the savings structure in South Africa has changed. There are big companies now handling 90% of the savings. Those savings go through these big companies because National Treasury has given tax-free incentives to people like ourselves with provident funds to put our money through this single channel. And of course, we do it ourselves. We put it through this single channel so that our funds, which are managed externally, umbrella funds, earn these tax-free incentives. This has resulted in most of the money not being eligible for smaller companies. Because what has been happening is, a CISA, which is the association under which all these big companies fall, has strict rules. And it has certain levels of investment that are just out of bounds. And the smaller ones are out of bounds. And you, at the same time, don't have this whole situation of the past where you had stockbrokers. Stockbrokers are not there anymore, and they're wealth managers. And these wealth managers have rules, and these wealth managers' rules put them into the higher brackets. So you've got a situation where if something does not change, the delistings that we've seen are going to grow. We've already had many delistings. We're not having new listings. There are more coming next year. We are a mining jurisdiction. Mining needs to reflect on that stock exchange. It has to be transparent. You cannot have exploration companies fiddling around there. It's better for them to be on the exchange, but they're not going to go there. Yet, if you look at other mining jurisdictions, and if we just look at Australia, because of what's happening in mining, because of this big demand building up for critical metals, there have been 63 listings there so far this year. Let me repeat that. 63 listings there so far this year. And then you look at ourselves and you have 20 delistings and another 9 coming up next year. So the National Treasury needs to go to the mirror and look at itself in that mirror and to continually say that no, this is the way we're going to go. And in fact, tighten it up. And you see that a merger is now taking place. 2 of those companies that fall under this big CISA are going to merge. And there's encouragement for them for more to merge. So this is going to become more and more acute, and the savings and our savings are just going to go into these big companies. Whereas you look at some of those small companies, if a percentage went in there, we've got one company where an Australian pension fund, construction pension fund, has invested in our secondary listing here. And this company, is really giving its shareholders an incredible return. We have had another company that had a 220% return. This is out of bounds. So what you've got is this no risk, all the money going one place into the big section. And when you ask National Treasury for an incentive for people to invest in the small sector, like you've got in Australia, like you've got in Canada, they will not do it. Even though Trevor Manuel, when he was Minister of Finance, promised this. So they've really got to do something about it because they are changing the whole landscape of the small part of the Johannesburg Stock Exchange.
Martin, talk to us about bringing in the private sector to clear excessive government backlogs.
At the same time, the state is not performing. So you can say, well, why are you looking for small companies to list when look at the shambles we're in with the applications for mining exploration, applications for mining prospecting, applications for mining licenses. The Parliament reported a 5,000 plus backlog. Now, at the rate at which they're clearing those, some people are estimating that it'll take 10 years. What they must do is they must put tenders in, they must invite tenders for people to come in and get rid of this backlog, because that will stimulate the economy. If you've got these mines listing, when that happens, engineering comes into play, drilling comes into play, commercial activities, there's a long supply chain. This is a no-brainer investment. But you've got to have this backlog cleared. Otherwise, fine, National Treasury says we're going to incentivize this, but there's going to be no one coming forward because these applications are not coming through. And when you question them on the numbers, they don't give you very certain figures. They're very vague. So I think the private sector needs to come in. You need to invite tenders, get people willing to come in and get rid of those backlogs fast.
Lastly, Martin, Jupiter Mines recently held its general meeting where it saw a resolution for the removal of the MD and CEO as member of the board.
Yes, so we had the removal of the CEO and MD from the board of Jupiter Mining, but we also had a doyen of South African and international mining, Brian Gilbertson, voted off the board. Now, this is another situation that really shouldn't be happening. You shouldn't have a situation where the only asset of Jupiter Mines is a South African asset in the Northern Cape, a manganese asset. But where is it listed? It is listed in Australia. Why is it not listed here? Because these small companies, they're just not getting a show in on the Johannesburg Stock Exchange. And this one came into being in 2010. So, it's been around for a long time. So you see this whole structure now changing. Would that have happened if this main listing was on the Johannesburg Stock Exchange? One wonders whether Brian Gilbertson would have been voted out, whether this particular CEO and MD lost his MD position. He's going to have to keep his CEO position, but they're complaining about how much he's earning, and they have a spill meeting. It's not an annual general meeting, it follows the annual general meeting. And when you're unhappy, you then move people out of the way. And it seems that maybe there are bigger things. I hope in the background of all this, there are much bigger things, that the South African manganese industry is going to be consolidated, that the national patrimony that should be coming out of this will be earned. The manganese companies are too scattered, and we need to have them consolidated. We need really to have a big player there, because otherwise you don't have the prices. You don't get the prices that you should. And we, as the custodians and part owners of that manganese in the ground, should be keen to make sure that we get fair prices. And that's not happening. So perhaps this is the start of a big consolidation and a big change. But in the meantime, one of the doyens of mining, Brian Gilbertson, has been ousted as the chairperson.
Thanks for speaking with us, Martin.
Thank you, Sashni.
That's it for today. Join us again next week for more news analysis on the local and global mining industries. And don't forget to listen to the audio version of our Mining Weekly daily email newsletter.